Hey everyone, today we're diving into a really important topic, something that unfortunately affects a lot of people, digital fraud. But we're not just talking about the problem, we're going to break down how you might actually be able to claim your money back.
You know that horrible sinking feeling when you realize you've been scammed? Yeah, it's awful. And your first thought is probably, well, that's it. The money's gone forever. But you know what? Maybe not. There's some new hope on the horizon, so let's get right into it.
So here's how we're going to break this down. First, we'll look at a brand new safety net that's being set up. Then, the big one, are you eligible? After that, we'll walk through exactly how to claim your money, understand how the payout works, and finally cover the limitations you absolutely need to be aware of.
Okay, let's kick things off with the big news. The Reserve Bank of India has come up with a new plan, a proposed solution specifically designed to help out people who've been hit by digital fraud.
It's called the RBI Compensation Framework, and really you can just think of it as a new safety net. It's built to catch folks who've been victims of those smaller but still painful online scams. The whole idea is to help people out and, honestly, to make everyone feel a bit safer using digital banking.
Now don't rush to the bank just yet. There's a timeline. This whole new framework is planned to go live starting July 1st, 2026. So it's on its way, but we've got a little time.
All right, on to probably the most important question for anyone watching this. Do you qualify? Are you eligible for this compensation? Let's go through the checklist.
The first big number you need to burn into your brain is 50,000 rupees. This whole safety net is for frauds where your total loss is 50,000 or less. If you unfortunately lost more than that, this specific plan won't apply to you. Okay, let's run through all the boxes you need to tick. First, like we said, the loss has to be $50,000 or less. Second, you got to be quick. You have to report it within 5 days. Third, and this is a big one, it's a one-time deal, a lifetime benefit. Of course, the bank has to confirm it was a real fraud. But here's the game changer. You're still eligible even if you were tricked into sharing your password or an OTP. That's huge. So, let's say you tick all those boxes. You think you're eligible. Great. Now what? What do you actually do? This next part is all about the practical steps you need to take. You've got 3 main steps here, and the order is super important. Step 1, report the crime to the authorities. You can either call the helpline at 1930, or you can go online to the National Cybercrime Reporting Portal. Step 2, take that report info and immediately contact your bank. And Step 3, you'll have to fill out a specific compensation claim form from your bank, and you'll need your Aadhaar number for that. And listen, the clock is ticking. It's so important to understand this timeline. From the moment the fraud happens, you have just 5 calendar days, that includes weekends, to report it to both the police and your bank. Once you've filed the claim with the bank, the clock starts for them. They then have to credit you the compensation within 5 calendar days.
Okay, let's talk about the money. How much do you actually get back? It's not always the full amount, so it's good to understand the math behind it.
So, here's the second big number to remember, 25,000 rupees. This is the absolute maximum you can be compensated under this scheme. Even if you lost, say, 45,000, the payout will be capped at 25,000.
So how is that all calculated? Well, there are 2 tiers. If your loss was under about 29,500 rupees, you'll get back 85% of what you lost. And the cost of that is actually shared between the RBI and the banks involved. Now, if your loss was between that amount and the 50,000 rupee limit, you just hit that fixed cap, and you'll get exactly 25,000 back.
So far, this sounds pretty amazing, right? A real safety net. But as with anything that sounds this good, there is some very important fine print that you just can't afford to ignore.
And this, right here, is probably the biggest one. You need to really let this sink in. This isn't like car insurance where you can make multiple claims. You get to use this safety net exactly once in your entire life. It's a one-and-done deal.
It's really important to see where this new rule fits. Think of it as an extra, special layer of protection for a very specific situation. It doesn't get rid of the old rules. The regular bank liability rules are still in place for bigger frauds, for any fraud that happens after you've used your one-time claim, or for times when you were clearly negligent.
Okay, we've gone through a lot here. Eligibility, how to claim, the payout, the fine print. So what's the single most important thing to take away from all of this?
Here it is. This new framework from the RBI is a fantastic, powerful new layer of protection. It really is. But it doesn't change the fact that the #1 best defense against fraud is you, your own vigilance, your own caution, and your own skepticism. That will always be your best protection.
And that wraps up our look at this new fraud compensation scheme. I really hope you found this useful.
If you did, do us a favor and hit that like button. Share it with anyone you think might need to see it, and of course, subscribe for more explainers just like this. We'd love to hear your thoughts, so please drop a comment below. Thanks for watching.